Welcome to the Passive Mobile Home Park Investing Podcast with your host, Andrew Keel. This is the podcast where you can get the education you need to invest 100% passively in the highly profitable niche of mobile home parks.
Welcome to the Passive Mobile Home Park Investing Podcast. This is your host, Andrew Keel, and today we have an amazing guest in Sydney Barker of Open Door Capital. But before we dive in, I want to ask you a real quick favor. Would you mind taking an extra 30 seconds and heading over to iTunes to rate this podcast with 5 stars? This helps us get more listeners, and it means the absolute world to me. So thank you for making my day with that review of the show. All right, let's dive in. Sydney is in the asset management division at Open Door Capital, a mobile home park fund ran by Brandon Turner of BiggerPockets. She is also the VP of Finance at Washington Street Properties. Prior to joining Open Door Capital, Sydney served as the corporate controller for a $250 million IT company, as well as a senior financial analyst for a large public insurance company. Her experience includes various mergers and acquisitions with private equity firms, ERP implementations, SEC reporting, cash management, and strategy. Sydney also invests in and syndicates multifamily properties with a focus specifically on the mobile home park asset class. I also saw that Sydney is an avid polo player, so excited to learn more about that. Sydney, welcome to the show.
Thank you for having me, Andrew.
Awesome. Maybe you can start out by just telling us your story and how you got into manufactured housing.
You know, this has happened a few times in my life where I was just like, woke up one day and I'm like, I think I just want to buy a mobile home park. It was just kind of random. I had Googled, multifamily real estate podcast, and I came across Rod Cleef and kind of plugged into his community. And I attended one of his live events, and, everyone was excited about apartments and duplexes and quads. And I was thinking, all right, what is everyone not interested in? I was like, wow, mobile home parks are really not sexy, like nobody was interested. And so I just decided that day I was just going to do it. I didn't know how to do it, where to start, but I just made a decision to do it. And 2 years later, now mobile home parks are probably the sexiest girl at the party. So it's definitely changed in the 2 years that I've gotten into it.
Wow, that is fantastic. Was there something specific that you heard about, or like a certain metric that was like, all right, mobile home parks are good? Or was it just everybody's looking right, go left?
It was a little bit of that, but then it was just also, I got to thinking about, and everyone talks about this, the baby boomer avalanche, that generation not being good at saving for retirement. And it just made sense to me that affordable housing is something needed now, and it's going to be, even more so in the future. And now that we've got, the situation of, inflation, hyperinflation setting in, it's become, an even more reason that's an attractive option to offer people.
That's a good segue into the next question. What hurdles do you think the manufactured housing industry, will face moving forward? And, inflation is a big one. A lot of people are worried about that. How do you think the industry will fare, given the next 5 years or so?
I think the biggest challenge is the supply. I mean, you've got mobile home parks being torn down and very few being built. And so it's kind of a dying breed. You've got a lot of municipalities that don't want them, even though the community really needs them. And a lot of the manufacturers, for the houses themselves are just, as getting crushed right now with orders. We've been trying to put in orders and, we're not. So some of them we may not get till, second quarter next year. So it's really wild. So the supply is, to me, the biggest hurdle for the industry.
Yeah, no, I agree. And we just placed an order, and same thing, we're looking at, halfway through next year. So it's crazy. Luckily, wood prices are going down. So, when we place the order, they're like, hey, this is the price today, but it may go up once your homes hit the assembly line. And we're like, oh my goodness, what do you mean? But thankfully.
Yeah, it's wild. When do you think the supply will kind of settle down?
I really don't know. That's a really good question. I hope in the near future, but I think with, wood prices going down, I know that there's more with the COVID shutdown. There's more like my neighbor he's a new home builder, and he was saying how like resin is also, it's not just lumber that's experiencing extreme shortages, but resin is also in extreme demand. So I think in the next 12 months to 24 months, we should be back to normal, but who knows at this point? What do you think?
I think the same as well, probably a year and a half, 2 years.
Yeah. Yeah. Sydney, so how did you come around to own your first mobile home park?
So I decided, to buy one, and I decided I'm not going to start small. I think everyone starts small, like, oh, I'm going to buy a single family house or, just one. And something had inspired me. I was like, I'm just going to buy a big one. That's my step one. I'm just going to buy a big one. So I ended up teaming up with some people. I had no money to invest, and I had no experience at all. So, my only experience, the only thing I could really bring to the table was the fact that, I'm a numbers nerd, and, I can, my brain is Excel basically. So, I knew that I could underwrite deals and analyze them. So that's kind of the value that I brought. And I just teamed up with some people that I knew could help me get the money. And I teamed up with a really great guy, Todd Murphy, who's my partner right now, who's just operationally, he does such a great job. So my first deal, it was a broker deal, and it just kind of had like everything that you're looking for in a good deal. It just felt right. The lot rents were low. There were empty pads. The units were not sub-metered. So it was just kind of like the perfect
Juicy
deal.
Yeah, lots of value add there. Yeah.
And so it was 71 pads in Indiana, and it's been a wonderful property. We've done some improvements, infrastructure. We brought in some homes. We've renovated homes and sold them. And I've heard people talk about, pride of ownership. You go in and fix stuff up and everyone starts doing the same. I actually saw that happen. When we first took it, it was very neglected by the previous owner. And, with our team going in there and just really trying to clean it up and make it nice, a lot of the other homeowners started, improving their yard and fixing up their homes. And it was really cool to see that. So we still have it today, and it's been a wonderful property.
That's fantastic. And I love that you still own it today. Do you plan on selling it?
Not sure yet.
Yeah,
there's still stuff to do that we can do to it. So it's still a good deal for us.
That's awesome.
Yes.
That's very cool. What was your toughest hurdle with that park?
Basically just doing everything and not knowing what I'm doing.
Yeah.
It's just,
sure.
But you figure it out. But, it was just scary not knowing, like, is this a good deal? Did I run the numbers properly? You always second guess yourself, and the last minute funding of money is always, I think I lost a few years of my life, like that week of closing. There was hundreds of thousands of dollars in a wire that was missing, and I was cussing out the people at Chase Bank. It was just wild.
Yep. Oh yeah. Pre-closing, it can be stressful. I've been there.
Yeah.
So tell us about where you are today, all the way from your first park now with Open Door Capital. If you could just shed some light on that, that'd be awesome.
This is, to me, a great story. There was a mastermind that I was in, and one of the guys was always encouraging, put out there what you're doing, who you are, what you want. And that's exactly what I did. I had no idea what I was doing, but I just kind of was putting my story out there, and, I got a lot of friends. And Brian Murray, who wrote the book Crushing It, he's with Washington Street Properties and Open Door Capital. He heard me on a podcast. It was my first podcast. I literally had no idea what I was saying, but he heard me. We ended up, meeting, and one day he was like, "Hey, we're gonna start this project, which would later be the mobile home park funds." And he said, "I might need your help one day." And I said, "Okay, just let me know when you're ready." And him and his wife ended up moving to my town. I'm in Alpharetta, Georgia, and they said, "Hey, we're ready. We're growing so rapidly, and this is so successful, and we would love for you to come join us." So it's been an incredible experience working, with this group. This team is the definition of what a team should be. Everybody's in their own lane, doing their thing, working together, and it's been an incredible experience. We just closed our fourth fund, so.
That is so awesome. Yeah. I mean, I've seen it, from a 30,000-foot view, what you guys have been doing. And that has to be fantastic and a lot of fun, every acquisition. But I mean, already four. It seems like when it just started, what was it, 2019 when you guys started your first fund? So,
so 2 years.
That's a lot of growth. That has to be a lot of fun.
Yeah, definitely.
Very cool. So how do you all handle the management of your parks? A lot of people have said that's the biggest hurdle for them is the operation side of things. How have you all handled that?
It's in-house. We don't use third party. We've got our own property management team here, and we've kind of got some different situations depending on the park. I would say most of our parks have on-site management, and it was kind of a legacy setup. But those parks are mostly infill or project parks, so they kind of need that, person there to kind of manage things. It's been a great experience. And then we've got a couple parks that are regionally in the same area, so we're able to kind of use an offsite park manager that can kind of go between the three parks, and that's worked out really well as well.
That's awesome. Yeah, I mean, having good on-site or nearby management, I feel is like the biggest secret, right? Like if you have a good manager, a bad park that has a lot of issues can be very quiet. It's just very dependent upon setting those expectations. So that's awesome that you guys are doing it all.
And all of our park managers, it's so interesting. They really love the park and the tenants. I mean, they really take ownership, and we have not lost one park manager since all of our acquisitions. So wow. I think that's pretty impressive.
That's impressive. Yeah, that's very impressive. I drove through one of the Open Door Capital parks in Grand Forks, North Dakota. So I have two parks in Crookston, Minnesota, which is about 20 minutes, 30 minutes east of Grand Forks.
Okay.
And we went through one, I'm not sure the name of it, but it's underneath of a big water tower. And I could have sworn, because you guys had just purchased it, there was probably 20 to 30 demos going on at the same time. And I was just like, wow, this is a lot. There's just twisted metal, so there you hit the ground running. So I'll give you that. That's awesome.
We have an incredible guy on our team named Tristan Thomas that runs our infill. That's all he does. And he does an incredible job. So that's all.
Wonderful.
Yeah.
That's wonderful. How do you all find your deals and source, new parks to buy?
Here at Open Door, we have our own acquisitions team. So a lot of it is broker relationships. We also have, the bring Brandon a deal that's out there that people can take advantage of. And that's, we've done that a few times where someone's brought us a deal and, they get a nice little finder's fee for that, and it helps us. So it's a win-win.
Yeah. Yeah. That's awesome. What is your deal criteria in case somebody has a deal out there?
It's got to be 100 pads plus. City sewer or city utilities is what we're after, 100 pads plus. We do like the mostly tenant-owned home model. For, if there are park-owned homes, our process is we convert them to tenant-owned homes through lease-to-own contracts. So I would say mostly tenant-owned homes. I would say 75% occupied.
Nice.
Yeah.
That's great. So Sydney, if you were going to describe the perfect mobile home park, right? Like the one that is the legacy asset that you want to hold forever, what would the perfect mobile home park look like in your eyes?
It would be maybe 15, 20 minutes outside of a major city, lot rents really low, all tenant-owned home, city utilities, paved roads, brand new infrastructure, underground infrastructure.
Now you're
I
talking.
think that's the hardest part is the infrastructure of a lot of these parks is just terrible. So Lots of repairs have to be done. So how about brand new infrastructure, brand new roads,
all plastic, all PVC, right? All PVC,
all
water
PVC.
lines, sewer lines.
Yeah, in a warmer climate.
There you go. Yeah, no more busted sub-meters in the winter.
Exactly, yeah.
That's awesome. Sydney, what common mistakes do new operators make?
I think the most obvious one is they underwrite for everything going correct 100% of the time, and that's just not reality. I think people will look at a deal and they'll say, "Oh, I can manage it better. I can run it better. I won't have those expenses." And I would just encourage people to not be so optimistic, because I think a lot of people try to make the numbers. They try to rationalize the numbers. Like, oh, I can run this at a 30% expense ratio. Maybe you can, but be realistic. So I think that to me is the biggest mistake is people getting too excited and trying to make the numbers work when they don't.
I agree with that. Yeah, I think that's a good point. And you being the numbers nerd, right? The underwriting queen, maybe give us some insights as to your underwriting and some of the conservative measures that you make sure to include in your pro formas.
Okay, well, I don't do underwriting for Open Door Capital. Our acquisitions team does, but I can do underwriting and I have done it. I think the biggest thing is just making sure that your numbers are realistic and planning for people moving. And this is one of the things that we do here that I really like is our team. We have a feedback loop. So we have this acquisitions team, and then I'm on the asset management side. And like the other day, I was talking with one of the guys, and I was like, we need to bump up our legal fee underwriting expectation because they've been a lot higher. With COVID and, people, not wanting to pay and us having to, try to pursue, our legal fees have been higher than previously, expected. So that's one of the things that I've noticed. But I would just be conservative with expense ratios and not assume you can immediately reduce expenses, keep them the same. I think the biggest thing is focusing on the top line. I mean, revenue is the driver of all businesses. You can spend time trying to nickel and dime your expenses, but the biggest impact you're going to have is when you affect revenue.
I love that. I think that is a very good point because, in some of our parks, we're running a little bit high on the expense ratios, and, they're parks that we recently purchased. So, maybe 60, 70% occupied. A lot of our expenses are fixed, right? Like, they're not going to change. Insurance, property taxes, they're about the same every year. Obviously, They go up a little bit, but whether you're full occupancy or you're 60% occupied, your taxes are going to be the same. So when you are more occupied, you're going to run a tighter ship, and it just makes a lot of sense.
Mm-hmm.
This is like the most important question of this interview. What would you say, Sydney, are the most important things that passive investors, we're talking about limited partners here, what are the most important things that they need to look out for when investing into mobile home parks?
I think the biggest thing is you got to make sure you're investing with an operator that knows what they're doing. There's a lot of people, not just in the mobile home park world, but, kind of in and around our industry, multifamily, even single family, that there's a lot of hype. There's a lot of hype. People talking big games because they, listen to podcasts and read a book and went to a conference. I would vet, any operator that you choose to invest your money with, look at their portfolios, look what they've done, and really understand who you're investing with, because it's a business. It's not a stock that you just buy and it just, makes money, sends you dividends or whatever. Like it's a business, and, an operator needs to know how to run the business. So I would say that's the biggest thing.
Maybe you could shed some light. Like, how would someone be able to tell if an operator is running the business well or not?
I would say show me what your portfolio looks like. Show me maybe some financial reports, like some P&Ls. Maybe
And what would be like the first thing on the P&L that you would look for? Would you look
I
like
would look for.
yeah.
I would look for expense ratio. I would kind of see, do they have a bunch of different revenue items? If they're charging laundry and pet fees and all these other miscellaneous items, that to me is kind of a cool indicator that they really know that this is a business. They're not just charging lot rent. Let's see what else. Are they running it at an efficient expense ratio? I would look.
And what's a ballpark? Sorry, what's like a ballpark, expense ratio that you feel is conservative that would be, good for good to see on a P&L?
I think I would want to see 45 or under. Obviously, under being more attractive, but it just kind of depends on the life cycle. Like you said, y'all just bought some parks and they're higher right now. We've gone through that too. I mean, when you first buy it, you kind of take what you have. And so I think what is kind of cool is when you look at a P&L, I would look at a month over month P&L. So, look at like a trailing 12 months, a TTM P&L, is the revenue going up? Are the expenses going down? What are the changes? I would, as an LP, I would make it an interview, tell me what you're doing. You can, when you talk to someone, you can kind of start figuring out, are they all talk or have they actually done something?
That's a very good point. Yeah. A little bit of gut instinct, as well as kind of checking what you can, with the facts that are presented.
And to me, if you ask for reports or something, the people that don't have anything won't have anything to give to you. So
that's a good point as well.
Ask for some paper and see what you get.
We're going to put that in like the quotes in the show notes. Ask for the paper and see what you get. I like that. I love that. Sydney, how do you think a $15 an hour minimum wage would affect the mobile home park business?
The mobile home park business. I think that's such a much broader question. I mean, it would affect the entire economy. To me, in a negative way. I don't support that at all. So I think there's just a lot of trickle down effects. I haven't quite thought about or analyzed how it would affect mobile home park specifically. I mean, in all fairness, it could be good. You've got people that do make less than $15 an hour as your tenants. So perhaps it could be good, but overall, I don't think it would be good for the economy. So I don't believe in doing something that short-sighted. Like, well, it's good for me. I think it's more important to do something that makes sense overall.
Yeah, it's been interesting. I've asked that question to a couple different operators, and we've had mixed results. Some say that it would be bad, because it would incline businesses to start more artificial intelligence and self-checkout lines and things like that. And some are for it, and some are against it. So appreciate your insights there. Sydney, what is the value proposition at Open Door Capital, and what makes you all different from other operators out there?
The fact that we have funds. In our funds, we're able to diversify. We can have a park that is pristine, cash flowing, consistent, and we can pair it with a park that, needs work. Maybe it's 60% occupied. We got to do a bunch of infill. We may not see that cash flow for a little bit. So, we've had instances where some of our parks carried the other parks' expectation for a distribution. So it's just a great way to kind of diversify your investment and not putting all your chips in on one deal going perfectly, because it never does go perfect.
Yeah, there's always something, there's always something that comes up, and that's why it's so important to have that miscellaneous item because in your capital raise, because these are, like you said earlier, these assets, these mobile home parks, a lot of them are 50 plus years old. Mm-hmm. And, the water lines, the sewer lines, they've been deferred maintenance on for a long time. So it's good to just have those reserves. Sydney, last question. What is like one piece of advice that if someone's like just considering the mobile home park asset class, what's one piece of advice you would give them that's like tangible that they can use in their passive investing?
Just someone that wants to get started in mobile home park investing.
Exactly. Someone that's just dabbling and is, trying to get educated and would like to dive in. What's just like one of the most important things that they should know, or that they should maybe get educated on or attend or something like that?
You got to know this asset class. You definitely got to do some research, listen to some podcasts. I started off listening to Frank and Dave, which was very helpful. It's very old school. So disclaimer to anyone out there that goes and listens to that, it's very old school. And honestly, since that, education's been out there, a lot has changed. So I would say some of that is not necessarily relevant information anymore, but I would say you've got to be educated. I know that in our industry, especially multifamily, there's like this, rah, just get out there, just do it. Don't even think about it. Just do it with your eyes closed. And while I appreciate the sentiment behind that, I also value education. I'm a little bit of a different story. Like I did go to college. I went to university, finance and accounting. My degree, I actually capitalized on. So I feel like nobody says that. I feel like everyone wants to go in there and bash, education institutions, but mine really did pay off. So I think education is important, and whatever it is you want to do, become an expert in it and decide you're an expert even before you know everything. Because honestly, you'll probably never know everything, but
yeah, always learning. There's always, something else. I love just digging in and still listening to other podcasts myself. I love Frank's podcast, the Mobile Home Park Mastery.
yeah.
Ferd's podcast, the Mobile Home Park Lawyer podcast, is amazing.
Mm-hmm.
So just there's a ton of information that's free at your fingertips that you can get, just by dabbling into, to your podcast app.
Absolutely.
So I love it, and I hope this podcast is included in that list as well.
I hope so. Yeah.
Definitely. Sydney, how can listeners get a hold of you if they'd like to do so?
I'm on LinkedIn. I'm on Facebook. You can, I can give my email address out. If anyone wants to get in touch with me, it's Sydney, SYDNEY @odcfund.com. Reach out to me. If anyone has any questions, needs any help, I love to talk mobile home parks all day.
Oh man, that's awesome. Sydney, it was an absolute pleasure having you. Wealth of information. Really thankful you came on the show. That's it for today, folks. Thank you all so much for tuning in.
Thank you.
Would you like to see mobile home park value add projects in progress? If so, follow us on Instagram @PassiveMHPInvesting for photos and awesome videos from our recent mobile home park acquisitions. Once again, that's @PassiveMHPInvesting on Instagram. See you there.